This new round of U.S. tariffs weighing on the commodities space today, but as we go further out, are there any signs we should be watching for in those sectors? Joining us now to discuss all that, Daniel Ghali, Director for Commodities Strategy with TD Securities. Daniel, great to have you here.
Yeah, thanks for having me, Greg.
So we got a big piece of news. Obviously, the markets are reacting in a fairly significant way. What does it mean for commodities?
Well, look, I think when something like this happens, markets shoot first, think later. So the information that we do have is that the tariff announcements were more significant than expected. The reprieve that Canada and Mexico did receive so far means that the tariff announcements are even more significant for inflation than they are for growth, but they're certainly significant. It's a significant growth shock as well. Well, I think the commodities complex is trading completely in line with that, right? We're seeing broad-based selling activity across pretty much any commodity on your radar, except for gold, which is the one outlier there. Within precious metals markets, I would say one of the really big stories over the last few months has been that the threat of tariffs has catalyzed a tidal wave of metal movement from everywhere in the world, but particularly from London into the U.S. That relates to the market structure, but within one of the annexes tied to the executive order, they clarified that many commodities that we care about are exempt from these tariffs. So what we've seen is the spread between US-based bullion contracts and the underlying physical metal completely collapse over the course of this session. Interestingly, that hasn't had a very big impact on gold prices, but arguably it may have an impact on other precious metals. You see, one of our theses has been that these implications were unique for silver markets, where we were inadvertently draining the world's largest pool of metal in London. And the question now is, well, if bullion products are exempt, then will the metal that has already moved into the US flow back out? And that is still up for debate. We think there's reasons to believe that it'll flow back out at a much slower pace than it came in, in which case you still have upside potential in some of these other precious metals. But the most interesting piece of price action today is certainly that gold seems untouchable.
With gold well over $3,100 an ounce and making all these new highs, I think a lot of investors will look at that and say, given the times we're living in, can it move higher from here?
Well, here's the most interesting piece about gold prices right now, right? Gold is overbought, but underowned, right? In contrast to what you might expect by looking simply at a chart of the price, we've actually seen very substantial liquidations from the speculative community over the course of the last months, right? Initially, this was the macro fund community. That's the group of investors who care about things like the Fed outlook, deficit, so on and so forth. They were holding an extreme position size heading into the US election. That's no longer the case today. In fact, today we think they hold less than they did in March of last year, where gold prices were trading $2,000 an ounce. So really what's driven those liquidations is unclear. It's possible that it's tied to constraints on risk budgets associated with the decline in equity prices, as opposed to something that's specifically tied to gold prices itself. But what we do know is that in this moment of time, Western investors are actually underpositioned in gold. And the biggest buyers of gold over the last several weeks have been out of China. That's been a particularly strong story.
Is this the central bank, or is that buying actually moving aside of the central bank?
Well, the central bank is buying, but the new piece of information is that Chinese life insurance companies, for the first time ever, have been granted permission to purchase gold. That in and of itself, right, we think Chinese life insurance companies have announced that they have already purchased some gold since they were allowed to. But we think that the narrative has bred animal spirits, which are driving Chinese ETF fund flows. So that's really where the buying activity is coming from, is Chinese ETFs, potentially tied to retail investing, but very substantial amounts of gold purchases through that channel.
Interesting stuff there on the metals front. I want to talk to you about oil. When I first saw the move in West Texas Intermediate and Brent this morning, I thought, okay, well, tariffs, worries about global growth, but then I saw the OPEC headlines as well. What is going on with oil right now?
Yeah, oil is under attack on several fronts. It's been our view that there's only a very narrow path to substantially higher oil prices this year. Truthfully, that right tail risk, as you might call it, is fairly fatter than is currently being priced by markets, and it mostly relates to the prospect of increasing geopolitical tensions in the Middle East. But for the time being, the combination of a growth shock, of a decrease in supply risk premia tied to energy products being exempt from the tariffs, and OPEC announcing that they are bringing barrels back to the market at a faster rate than expected, this is an attack on several fronts on the oil price.